Okay, so I found when people invest, the broker that they use to buy and sell is a very personal choice. Now, this is down to a couple of things. Some people might prioritize things like the UI and the UX. Some people might prioritize pricing or spreads on FX, and other people might prioritize access to certain global markets. So I'm going to give you a breakdown of 5 of the biggest brokers in Singapore and my own personal choice for what I use for various markets. All right, so before I get started, I'm Tim from Tim Talks Money, and I worked in private wealth and asset management in both Hong Kong and Singapore for over 15 years. So if you want an unfiltered and honest take on all things money and personal finance related, then do subscribe to my channel. Okay, so let's start with interactive brokers. Now, this is tends to be seen as the gold standard for investors in Singapore. That's mainly because it has global access and it gives you access, most importantly, to European exchanges. So you can buy UCITS ETFs on exchanges like the London Stock Exchange, and you also have access to Euronext as well. And remember, this is important because UCITS ETFs, as we all know, are really the preferred option for ETF investing when we are non-US citizens, mainly due to things like the reduced dividend withholding tax, as well as the potential to be charged US estate taxes if you hold US listed assets. Okay, so one important thing to note when you do set up an Interactive Brokers account is to actually set it up under Interactive Brokers Singapore or Interactive Brokers SG. Because if you do set it up under the US entity, which is Interactive Brokers LLC, you actually won't be able to get access to the Singapore exchange. And so it's really important that you do set it up under IBKR SG. Okay, so what about pricing? Well, we all know that a lot of these brokers actually make a decent amount of money from the spread on foreign exchange. So say you're changing Singapore dollars into US dollars, they'll charge you an upgrade on that fee. So that spread can be maybe 0.4 to 0.5%. However, with interactive brokers, they're an institutional level broker. So you're actually getting a very competitive exchange rate. It can be as low as 0.001 or 0.002% in terms of the spread. So it's basically like you're getting the exchange rate at the spot rate. Okay, so let's cover the main markets that most of us in Singapore will be concerned with. That's access to the Singapore Exchange, the Hong Kong stock market for Chinese stocks, European exchanges like the London Stock Exchange for UCITS ETFs, and then finally the US market, since that's the world's biggest stock market. So what is pricing like? Well, actually, it's pretty competitive again, just like its FX spreads. If you're looking at the US, you actually have 3 options. You can be on IBKR Pro, on fixed or tiered pricing. And then if you are on the IBKR Lite service, which actually just launched last month in Singapore, then you can actually get commission-free trading. I'm currently on the IBKR Pro plan, and I'm quite happy with that given the trades are very cheap, as low as 35 cents per trade for US stocks. So if you are thinking of setting up an account, you could start on an IBKR Lite plan, and then you could obviously move over to a Pro. One of the key differences between the Pro and the Lite is that you get a higher interest rate on your idle cash balances if you're part of the Pro, as well as having a slightly improved API. So there's automatic trading programs and algorithms. Although if you are more of a casual trader or casual investor rather, then the IBKR Lite plan looks to be something that is completely acceptable for you to start your investing journey with. Okay, so what about pricing for the London Stock Exchange, where you can get access to things like the Vanguard FTSE All World UCITS ETF? Well, pricing here again is pretty competitive. It's not as good as the commissions, obviously, for the US. But if you are trading in US dollar UCITS ETFs and you are on the IBKR Pro plan, for tiered pricing, you can pay as low as 0.05% of the trade value, and that is a minimum of $1.70 per order. Okay, so let's move on to the Singapore market. So if you're looking at Singapore pricing, you are expecting to pay 0.08% of the trade value in terms of a commission, with a minimum per order of $2.50. Now, what about Hong Kong? Well, in Hong Kong, the minimum value that you can expect to pay is at least 18 Hong Kong dollars. and that is based on a percentage rate of 0.05% in terms of the commission that you're going to pay on your trade. One other great thing about the Interactive Brokers service is that you can actually set up a recurring investment plan. So this is eligible for things such as US listed stocks and ETFs, as well as European listed stocks and ETFs. So you can actually set up a recurring investment plan for a UCITS ETF every month or every quarter or every week if you want to. And that allows you to actually buy into the ETF in fractions as well, based on a set dollar amount. Okay, so what about the downsides of interactive brokers? Well, I think the major one is basically the user interface and the user experience. A lot of people don't really like the interface as it's very trading focused, which is unsurprising given it's actually meant to serve mainly institutional clients. So in that respect, it's not as user friendly, it's not as intuitive as other trading apps or investment apps. But on the commission side and on the pricing side, I think it does a relatively good job. Okay, so next up is FSMOne. Now, this is one of the biggest local brokers in Singapore, and it's owned by iFast. Now, it was actually launched in the early 2000s under the Fund Supermart brand, but it's kind of evolved into a DIY brokerage firm. Okay, so what about the FX spread in terms of changing your Singapore dollars into, say, US dollars or Hong Kong dollars? Well, according to community reports, FSMOne charges a spread of around 0.3%. So that's in line with a lot of the other mass market brokers out there, bar, say, Interactive Brokers. Okay, so let's move on to the commissions in terms of pricing for the buy and sell trades for FSMOne. And what I do like about it is that it's actually pretty simple, even if it might not be the cheapest. So you have a flat rate for basically Hong Kong, US, and the Singapore exchange. And for the Singapore exchange, it's a flat rate of $8.80 no matter how much you're trading. So if you have a lower value amount that you're trading, obviously that becomes more expensive. But once you're trading at, say, over 30,000 and above in one trade, it becomes much more cost effective. So if you're trading large amounts on the Singapore exchange, or if you're buying or selling a large amount, then the flat rate from FSMOne definitely becomes more cost effective. In terms of the US, it's pretty pricey at $3.80, given you can get some pricing that is, below $1 or even free on some other brokers. And for the Hong Kong Stock Exchange, it is a flat $38 on ETFs. But it is $50 for stocks. So that is something to keep note of. Okay, so what about access to London UCITS ETFs? Well, you actually can buy London listed UCITS ETFs with FSMOne, but it's not going to be cheap. If you do it on a one-off basis, it's going to cost you 0.15% in terms of the commission, or a minimum of £15 or 20 US dollars. Now, if you do go through the regular savings plan route, which is what FSMOne does offer investors, you can actually buy into London listed UCITS ETFs for basically a commission free, because you're doing it on a 0% processing fee basis. So you can actually invest into London listed UCITS ETFs every month on a regular savings plan basis, which is great with FSMOne. But do note that when you do sell out of the ETF, that commission rate will apply. So the 0% processing fee for the RSP is only when you buy or invest into the ETF. Also, I would note that one other positive of the RSP for FSMOne is that you can actually use your SRS funds, or supplementary retirement scheme funds, to fund your RSP for London listed UCITS ETFs. So that is something that we should definitely consider if we're looking at utilizing our SRS funds. Okay, so what about the user interface and user experience? Well, I think on the whole, it tends to be pretty positive in terms of the feedback on the app and on the user experience. However, I would note that you cannot trade fractional shares. You cannot invest in fractional shares with FSMOne. So that is definitely something to keep in mind. So for some of these higher, perhaps minimums in terms of the actual cost of a single share, that's something to keep in mind, that you might actually have to have that amount of capital before you invest with FSMOne. Okay, so let's move on to the third broker, and that is Moomoo Singapore. Now, we know Moomoo is a massive hit in Singapore, given it launched only maybe 3 or 4 years ago, and last year it crossed the 1 million user mark. And according to them, There are around 3 million adults aged 20 to 74 in Singapore, so that means 1 in 3 adults is a Moomoo user. And we can see why the popularity is so big. I mean, it is a pretty easy to use app. The interface is very simple, and investing into US markets, Singapore markets, Hong Kong markets is very easy with it. But what about the actual pricing and its commission rates? Okay, so first off, let's cover the main markets that it has access to. We know that it's got Singapore, Hong Kong, and the US, which are the main markets that you really want to invest into. The big one that it is missing, though, is London or European exchanges. So no access to UCITS ETFs, which are obviously a better way for Singaporeans and anyone based in Singapore to grow their wealth in a tax efficient manner. Besides that, though, they do also have access to the Japanese stock market as well as to China A shares. Okay, so first off with Moomoo, what about its FX conversion or spreads? Well, it is implicit in the auto FX conversion service that it has, but you're looking at a spread of around 0.3% to 0.4% based on community feedback. And that is pretty standard, I think, for most of the brokers in Singapore. Okay, so what about commissions? Well, in terms of commissions, it is very competitive. They do like to talk about how there is zero commissions on US stocks lifetime. So that's for the lifetime of your account. And then in terms of Singapore for new users, it's their first year, 0% commission or $0 commission. And then Hong Kong for the first 30 days. However, do note that there are still a minimum in terms of the platform fee. So there is a platform fee that you have to pay. So if you're looking at Singapore, you're going to pay 0.03% of the trade value in a platform fee, and that is a minimum of $1. In the US, you will still pay a platform fee of $1 per order. And in Hong Kong, it's going to be a minimum of 15 Hong Kong dollars per order. Okay, so one other great thing about Moomoo is that you can actually trade fractional shares. So that's a positive thing, which is not something that is available for all other brokers. They do also offer a regular savings plan or an RSP, although that is rather limited in that it's only available for US listed stocks and ETFs. Okay, so overall, Moomoo is a very easy to use app, super easy to fund as well with a direct debit that you can set up with your bank account, which means basically instant transfers. However, I would say that it does try to gamify the experience in some ways to try and make you to trade more and obviously pay more platform fees or commissions. But if you do know what you want to do and you're pretty disciplined and you're using it for regular investing, then it does serve its purpose well. Okay, so the fourth broker is Tiger Brokers. Now, this is the original Chinese broker that launched in Singapore in March of 2020, and that was followed by Moomoo, which launched in March of 2021, so just a year later. So what do we need to know about Tiger Brokers offering in Singapore? Okay, so what about market access for Tiger Brokers? Well, it's pretty similar to Moomoo in that it gives you access to China A shares, Hong Kong, Singapore, as well as the US. The only difference is that it also offers the Australian market, although I don't know how many people would be interested in that. Commissions wise, it's pretty similar again to Moomoo, although it doesn't give you commission free like Moomoo does on, say, Singapore for the first year and then Hong Kong and the US. But in terms of the actual pricing, it's pretty similar in that it has commissions for the actual trade as well as a platform fee, and they charge both, whereas Moomoo gives you one free for a certain amount of time. Okay, so what about the FX spread for Tiger Brokers? Again, it's pretty standard. It's going to range anywhere from 0.3% to 0.5% based on community feedback. Again, Tiger Brokers does offer fractional share trading for the US, so that again is pretty much the same as Moomoo. However, it does also allow you to invest your CPF and SRS via its cash boost account. So that is one key difference between Tiger Brokers and Moomoo, is that Tiger Brokers actually can allow you to invest your CPF or SRS funds into Singapore listed stocks and ETFs. Meanwhile, Tiger Brokers also does offer an auto invest function, which is pretty much an RSP. It's just a different name. And it allows you to invest on a regular basis into US markets with a fee as low as $2. Okay, and finally we have the fifth broker. Now this is Moomoo Singapore, and this is owned by Phillip Capital. So you can kind of see this as more of a legacy player, although it has a pretty loyal following in Singapore too. Okay, so they offer a mobile experience via its Poems 3.0 app, But what about the FX conversion fees? Well, it's again pretty standard for a broker in Singapore. It can be as low as 0.15% up to 0.35% in terms of FX spreads, and that's according to the community feedback. Okay, what about commission rates? Well, again, this is maybe not as competitive as other big brokers out there. But if you are at the higher tier of the Poem's sort of client base, then you can actually get a commission rate as low as 0.06% on Singapore stocks with no minimum commission. But for most people, you'll be paying 0.08% in terms of a commission with no minimum commission. But in the US, it's not that competitive. $3.88 in terms of a flat rate for a trade. And in Hong Kong, it is a minimum of 30 Hong Kong dollars in terms of the commission percentage, it's 0.08%. I would say, though, that Poems does actually have access to a lot of Southeast Asian markets that maybe a lot of other brokers might not have if that interests you, although it is a bit more esoteric in terms of the types of stocks you would perhaps buy in Indonesia or Thailand. So for the big markets, it doesn't really seem like Poems is that competitive. Okay, so Poems does also offer a regular savings plan or an RSP, and it is better than Moomoo's or Tiger's in that you can access the US market as well as the local Singapore market and the Hong Kong market. It does also offer what's called a junior share builder plan, so you can actually invest for your kids in a regular savings plan type of structure. Although there are a litany of fees involved with that, and you can only access Singapore listed stocks and ETFs via the junior share builder plan. Okay, so what are my key takeaways? Well, in terms of the overall experience, I think the more digital brokers or the newer Chinese brokers probably offer a better user experience and user interface versus more of the older brokers like FSMOne or Poems and even the more institutional grade brokers like Interactive Brokers. So what do I personally use myself? Well, I actually use two of them. I use Interactive Brokers and I use Moomoo. So my own personal preference is to use Interactive Brokers for either US listed stocks and European listed UCITS ETFs. And then I just use Moomoo for local Singapore stocks and ETFs, given the low cost and how easy it is to invest with Moomoo in Singapore. So they have an overall review of 5 of the biggest brokers in Singapore based on commissions, FX spreads, and the ease of using it as an investment platform. If you want more content like this on investing insights as well as money matters, then do hit the subscribe button and continue to follow.